Arvind Agarwal, CMD at GSFC, joins us on the show right now. Arvind, morning. What were the main factors that you think contributed to the strong turnaround that you've seen in Q2?
The main factors, I would say, are a massive reduction in the finished stock that we hold currently vis-a-vis Q2 of last year, combined with a good reduction in the price of major raw material inputs. This has significantly led to the very good performance. Other than that, there is also export thrust of industrial products. There is import substitution under aatmnirbhar bharat, and the massive reduction in finished cost has led to a drastic reduction in our bank borrowing, which has led to very much reduced interest cost and also the supply chain management logistics cost. All these combined has given us this very good performance in Q2, as also H1.
Where within raw materials are you seeing the cost pressure ease, and what exactly is the outlook on RM prices going forward?
We are talking of natural gas, ammonia, sulfuric acid, and sulfur. Now, the prices were low in Q2 as compared to Q2 of 1920, but they went up thereafter. So, if we compare with Q3 or Q4 of the financial year 1920, the reduction is not as much as it is compared to Q2 of last year. This has helped in reduction of input cost, but that is not alone. If we had not reduced the finished stock, fertilizer stocks very drastically, which we reduced by 747 crore in Q2 vis-a-vis Q2 of last year, and we reduced the bank borrowing by 908 crore in Q2, and in H1 we reduced the bank borrowing by 1360 crore. So this has led, apart from the reduction in the raw material cost, has led to this performance. Of course, we were constrained by the reduction in the delta between the benzene price and caprolactam price. This was $783, the delta in Q2, which has come down to $602 in Q2 this year. So there is a reduction, and as you are aware, caprolactam is our main industrial product, which also gives rise to substantial profits. However, we saw very good results in fertilizer sales because of very good Kharif. That, coupled with very good stock management and financial management, led to this very healthy results for GSFC.
They liquidate old inventory pretty easily for the quarter gone by. Receivables, debt also have come down because of that. How did you manage to do that?
I would say it was very good management. We launched a drive, a major drive to reduce the inventory, and we reduced the inventory of DAP by almost 80%, actually over 80%. We reduced the inventory of ammonium phosphate sulfate by over 75%, and we reduced the inventory of the slightly, I would not say damaged goods, but goods which required some rectification. We improved that, corrected that, and we put that in the market. So it was a very healthy effort to reduce the inventory, which reduced, as I said, by 747 crore in Q2 and 1360 crore in H1. So it was a major effort of the company. We realized this is an area that needs correction, and we worked on it throughout the first half of the year, especially in Q2.
Right. Mr. Agarwal, there's also been a much improved working capital cycle. Could you tell us a little bit about the reduction in your receivables and how the capital requirement is going to shape up going forward?
The receivable cycle has also improved tremendously because of the thrust in reducing our finished stock, and also the thrust, and also aided by the good Kharif. We had overdues outstanding of 325 crore in Q2 of last year, which has come down to only 28 crore in Q2 of this year. So the overdue and the other receivables position is very, very healthy. Our overdues have reduced by almost 90%. Coming to the cycle for the capital requirement, our borrowings, we, as I said, have reduced the short-term borrowing very significantly. However, under Atmanirbhar Bharat, we are undertaking very large and very healthy capital investments in new projects. So while our long-term borrowing is very low just now, its outstanding amount is only 120 crores, we expect the long-term borrowing to increase in the near and medium term. This is a change that will take place in GSFC insofar as our borrowing and cash management and fund flow is concerned.
Lot of thrust and focus on the Aatmnirbhar Bharat initiative. What has been the impact of that with respect to the import substitution products and the overall business in terms of how you're looking at that propelling your growth going forward?
We are going to increase our share of chemical and pharma and biotech intermediates in our product basket, and that would be very healthy from the point of view of profitability also, and mainly from the point of view of import substitution. Heeding the call of Honorable Prime Minister for Atmanirbhar Bharat, we have identified 8 chemical products, 11 pharma and biotech intermediates, 1 methanol, which is a commodity, and 1 fertilizer, which is calcium nitrate, which are almost entirely imported into the country from different sources. 2 of the products, methanol and calcium nitrate, we have already begun production in very good quantity, and this is going to help us in our second half of the current financial year also. The remaining products are in different stages of planning and of production. 1 product, calcium nitrate derivative, we are going to launch today. Another product, melamine derivative, we are going to launch 3 such products before 31st December. So we are going very strongly in our initiative under Atmanirbhar Bharat.
Mr. Agarwal, appreciate your time. Thanks very much for joining in and giving us that perspective.